Welcome back, everybody. Now we're going to look at confirmation and validation. All right. Now, confirmation of a trend. Now, on these Renko bars, it's pretty easy to spot. We can see that we start to gain strength when price closes above our 9-period moving average. Okay. Now, that's because that's just the simple one they give you. And then you're validated out when price closes below your 9-period moving average. The trend is back on when it's back above the 9-period moving average, and you're validated back out when it closes below. Then you're validated back in, confirmed back in. Then you're validated back out, confirmed back in, and validated back out. All right, now we can see differences in strength in a trend where the simple moving average is under all of these blocks. See, it's building strength, okay, for a run, as opposed to a weakening trend where it's striking through these blocks, okay, validating out, and as we can see, the trend got weaker and weaker, okay. Now you can see we got a confirmation in, okay, but we knew that wouldn't last. It hit the VWAP line, all right, was rejected. All right, VWAP is another thing that will be very, very important. That's something we'll save for another video, but for right now, just know that it's the volume, weighted average price, okay? Now, as we continue to look for confirmation and validation, signals, okay, we see right here we're trying to build strength, okay? So it's building strength again, all right? We're validated out, and then here we go. We get a confirmation of trend, and it's taking a run. Now this is live trading, all right? So we're looking at this as it's happening. All right, now let's go over to Tesla here and see what's happening with it. And we can see your validation and your confirmation signals here. Here you have confirmation, all right? Let's let it get caught up here. Either that or it's just moving quite fast, okay? And since we're on a 10 tick, it is moving at a 10-cent range. So let's pull this back out and we'll give it a 50-cent range so we can keep up with it as it moves, okay? Here we go. Now, you get validated out here, or even here, all right? The price pushes down, all right? You get your confirmation back in here, okay? Maybe even here. Rides all the way up, you're validated out. You get confirmed in, even though on a down signal, so we would not have wanted to take that trade, okay? Your validation back out, all right? Push back down. All right, so we look for a close above and below this moving average. And we can use several different moving averages. Now up here I have these exponential moving averages. All right, they're plotted, but for right now we're using a simple moving average. And let's change our simple moving average to, let's just say, a 21 period or even a 20 period will do. Work with it, adjust it, see what you like. Okay, let's zoom out here, and you can see, look what happened. Now when price gets under this 21 period moving average, as it wasn't validated out anymore, no longer looking at this until, oh, there we go, that was our first confirmation of a new trend. It was building strength, all right, gets rejected, wait, bounces off this line, there you go, so you get another confirmation. So at the very worst in this situation, when you would have waited, okay, you might have bought in here, you would have had to use a little bit more capital to buy a few more shares on this confirmation, okay, to be able to ride that trend. All right, as price started to build up above the moving average. Now when this 21 period moving average validates out here, okay, you see the trend weakens, okay. And what happens? We get a big pushback. All right, now it looks like we're trying to build strength here. All right, what's it building strength for? Looks like a down push. Okay, so we get our confirmation of an uptrend. You can ride that up, Looks like it validates out. Okay, so you may not even get out of this until this, but a smart trader would have gotten out here or even here. Okay, not here. As you can see, a big volume did. Okay, so these Renko bars, they make it fairly simple to understand confirmation and validation. So let's take a look at some Hikanashi candles. Those are fun. All right. On a 4-hour chart. Okay. Still the same 21 period moving average. We've just changed our candlesticks over. So we've gone up to our studies, and you've got your simple moving average on the 21 period. And you've come up to style, chart type, and you can mess with all of these different candle types, okay? The Equano volume is very interesting. But I focus on Hikanashi, line, and candle. And I use range and Renko and tick bars as well, but typically Hikanashi, okay? And that's because the trend is much cleaner with a Hikanashi view. All right, so we look for when price closes above the moving average. That's your typical, say crossover, type of setup. Okay, so we get our, confirmation of trend, and then we get our validation of trend. Okay, excellent example here. And you get your confirmation of trend, okay? You could say here, here, or best here, all right? And then it validates out up here, okay? No longer valid. And still a bad trend, as this 21 period moving average. Now I like to say whatever the 21 period moving average strikes through is going to be the current trend. That is not always true, but it's most of the time true. Okay, so let's go over here to your moving average, and I like to have a few moving averages, not just say the 9 period or the 21, but I like to go with a 55 period. A 100, 150, and 200, and sometimes even a 300, okay? But that gets awful busy, okay? Now, just with the 21 period moving average, you can see where you can take advantage of the ups and the downs, okay? But you need a little bit more information for when this type of stuff happens, okay? When it goes well under the 21 period, when is it starting to recover? Or the 55 period, when is it going to recover? Okay, that's why we want a few moving averages, okay? So let's add 2 more. Okay, so we've got our 55, and we will make this one more of like a 4 period moving average. And we will make this one our 21 period moving average. We'll make that 21 period this chartreuse color. The 4 period our green color. And the 55 period a red color. Okay. And that might make sense here in a second. All right. So taking a look here, let's get rid of our VWAP here. Where is that? All right. let's get rid of those lines. We only want to see our moving averages. So we have our 4 period, our 21 period, and our 55 period. Now when these stack up on top of each other, that is the best situation of a buy signal, and price will take off. Okay, now good buying opportunity, price recovers. Dips below, buying opportunity, and price recovers. All right, now when all three of these stack up though, you will see price start to take a run. This is a big bull flag. Okay. Now when they cross over each other, this is a bearish signal. Okay, the 55 period is now on top of the 21 period moving average. That's not always a good thing. It is if you're a bear. All right, that means that you are okay to enter a short position here. All right, making sure to place possibly a, say stop loss up here somewhere in case price goes against you the other way. But here we go. Now we have our 21 period recovering above the 55 period. Now we need to see this 4 period and see all three of these are stacked. So I bet some algos caught that and they bought in. All right, so we've really got to see a reversal in this now. But I think we're going to see some more consolidation. But for your confirmation and validation with moving averages, and this works the same for a simple period moving average as it does for, let's just go in here and say we can use, simple, exponential, let's say weighted, hull, and there's many different crossovers. And they have a crossover strategy specifically in Thinkorswim if you go to your Studies tab. So you can go and find let's see. Your moving average strategy or your moving average 2-line strategy. Okay. Now if you were to plot that, now you get to use 2. So now it's got 20 and 50 on an exponential. Okay, not the 21 and the 55. So let's get rid of the 21 and the 55, and we'll just keep the 4. But now we've got a 20 and a 50 exponential moving average that can be changed over to simple exponential weighted Wilders and Hull. And this Wilders will become important later. Okay. So we can do exponential. We'll leave it there. We'll hit apply. Okay. And now it gives you a strategy. This is the very first strategy that you get to play with as an algorithmic trader. Isn't that fun? So you get to come in here and see when it would buy and when it would sell. And if you're excited about it, you hit show report because it made money or lost money. This one seems to lose money a lot. Now this is the strategy that comes with Thinkorswim. And on the 4-hour chart, it might not work very well. But on the daily chart, I bet it works very well, okay? So many of the strategies in Thinkorswim do work very well. It is on what time chart do they work the best, okay? Now, as we can see, our moving averages stack up here and price closes above our 4-period moving average. It is a really bullish signal, and as so, price reflects. All right. So we look for our confirmation and we look for our validation, okay? Or let's just say invalidation, no longer valid, does not work, do not trade. All right. let's take a closer look here and see what we have. Now our 55 period is above, or our 50 period is above our 20. So that's not good. We don't like that. All right, and the 4 period is well below. So until these start to cross over each other and start going in the upper direction, it's not exactly a buy. Now Tesla Live is 706. We'll see where it is when I make my next videos. Of course, thank you for watching. Thank you supporting the StockSmart platform. That's what I get for trying to sit down while I talk. And just to change this around, let's throw it out to a, let's just say a hull, just for a second, see how it changes. And you'll see that it's a bit different now, isn't it? You know, now this one's above this one's, you know, trying to cross above. So you see, changing your moving averages around definitely help, okay? And the strategy becomes different every time you do it. So that's why it's important to change them around and mess with them and tweak them and critique them, and you get the point. So here we go. All three are stacked up. This is your buy-in right here. This is when the moving average says yes, we're good to go, or at least right here. So then it buys in, you ride the trend, okay? Now it gets validated out, let's just say here or even here, so it, you know, it should have sold out here, but it doesn't, it sells out here. So that needs to be adjusted. So that is what we can do as the algorithmic trader. We can come in and take this strategy, this piece of code, click on your little label there, and you can adjust these things to your liking. Now we'll get to that in the next episode on how to build a moving average strategy bot. So make sure you subscribe, stick around, hit that like button, all that good stuff. And I will catch you in the next bot building video.